Thank you. This is how this webinar has been originated. The topic chosen is operating budgets. That is one of the topic which is incorporated in the updated edition of my book. Now, question is why operating budget is required for any one entity. Howsoever rudimentary or tentative or preliminary the operating budget may be, still it provides to the management broad guidelines with respect to likely top line, that is a sales revenue, and likely bottom line, that is a PBT, profit before tax, which will happen or which will likely to happen in the next year, so that various functional heads can initiate their actions well in advance for the next year in a very unified way. That itself implies that looking at the top line and bottom line, all other expenses that need to be restricted within these parameters. So what will happen if these operating budgets are not prepared by any entity? Then on the first day of April, it's a question for the company or question for the manager. So here the the operating budget provides two answers: what to do and then how to do. That is why operating budgets are prepared to give this direction to the management. Here it will provide in terms of value parts. When the operating budget is prepared, this is nothing but a master budget. It will flow from different functional budgets like sales, which is followed by production. Production is followed by various resources which will be consumed to attain the production. Then it will provide the contribution which will management will come to know. Then various fixed cost or period cost which will be incurred, that will flow from different functional budgets. Now ultimately it will provide the bottom line for the company. With these broad parameters, the management will proceed for the next year, maybe from April to March for our company, and maybe for January to December for MNC. Now, these operating budgets, they include the following steps: definition of operating budgets, how the various operating budgets are prepared, and what factors are considered for preparation of those budgets. Then how operating budgets are monitored against actuals. In that case, the budgets and actuals are being compared. They may give rise to favorable variances or unfavorable variances. The unfavorable variances are again classified as actionable or non-actionable. And for actionable unfavorable variances, whatever the actions are required to plug that gap, that actions management can take over it. Then what advantages operation budget offer? Naturally, every coin has two sides. So disadvantage also there. Then we will also go through what human aspects are involved in operating budgets. Then how in real life, what practical aspects are involved in operating budgets, and naturally it will sum up with the conclusion. Now the operating budget will start with naturally sales budget. The sales budget will define the top line for the management, as well as entire supply chain management function will follow the sales budget. Here it will be sales quantity will be defined, sales realization will be defined, it will give result to sales value, and what product contribute, what product, how much it will contribute to total sales value, that will also be known to the management. We may say it is an ABC category. Now, what factors need to be considered for arriving at either sales quantity or sales rate, and sales value is a resultant factor. First is what is the top line which is expected. Then naturally, what is the product wise sales quantity and sales realization of last 2 years, that provide a broad guidance to the management of what is the likely scenario for the next year. Then any expansion which is going to take in budget period or not. If any expansion is going to take place, then there are two propositions. One is the existing quantity X, and second is after expansion, it will give rise to X plus Y. So when the sales realization is arrived at the marketing department, first is the sales realization for the quantity X, which is already
Rajesh sir, you are on mute actually.
Sir, your voice is not proper. Sir, we are not getting your voice.
Sir, you are in mute actually. Need to unmute.
should I start from the beginning or from which slide, means that the voice was not coming? Hello?
Sir, you can start from actual product wise sales quantity.
Huh?
Second point. You can start from second point.
Second point. Okay. This is from, I should start from this point?
No. You was on current that slide, na sales wise. Just go ahead. One more slide. Slide number 5.
From here? From here?
I think just go down one more slide. Slide number 9, I think. Yes.
Okay. Now, when the marketing department arrives at product-wise sales quantity, product-wise sales realization, the following factors are usually considered to arrive at the product-wise sales quantity and sales realization. First is, what is the top line which is expected? What is the actual product-wise sales quantity and sales realization which has been earned or which has been realized in last 2 years? So that becomes the basic guiding factor for the marketing department to proceed with. Now, whether there is any expansion in the budget year or not, if there is any expansion, then the question for the marketing department which will come is, first of all, there is a X quantity from the existing X quantity which is already existing. Due to expansion, it is now X plus Y. So this additional quantity, whether it can be pushed into the market at the same rate or it can be pushed into the market at a discounted rate. That needs to be decided by the marketing department. and the average rate may be considered to arrive at the sales realization. The second, next is to explore the new customers. Then the production capacity of the each product, because sales cannot exceed the production capacity, and the capacity utilization in the budget year should not be less than the capacity utilization of the previous year. So these 5 to 8 points are really important to arrive at the sales quantity and sales rate, apart from the actually what has been decided or what has been achieved by the marketing department. And this should match with the top line which is expected by the marketing department, with the expected by the management. If the top line is not met, again some reworking has to be done by the marketing department, either in terms of quantity or in terms of rate. Now this product wise sales budget will be followed by product wise production budget. In that case, it will be installed capacity, it will be production budget, what is the capacity utilization for the budget year, and what is the capacity utilization either of current year up to the period or of previous period. This capacity utilization insists for the 100% capacity utilization. That will be already better option for the management, because it will lead to the optimal utilization of the given resources. Now, what factors will be considered for this budget? One is the product wise sales budget, then a quality requirement of the customers. This production has to meet the quality requirement of the customers. Now, here for quality requirement of customers, it may require a proper coordination between sales, production, and QC, as well as purchase department. There has to be proper communication between all these departments to meet the quality requirement of a customer. Then if any efforts are made by the ID department to reduce the cycle time, then it means within the given time, more output will be churned out. So that reduced cycle time need to be considered. And install capacity of each product, and naturally availability of key inputs, including availability of key raw materials, that also need to be considered at the time of this budget. And raw material usage budget. In the raw material usage budget, it will give unit consumption for the product and production and unit usage quantity for the production. Now this unit consumption should be compared with the last year consumption and the last year usage quantity. Now here also the last 2 years per metric, last 2 years consumption or last 3 years per metric consumption should be compared. If any process improvement is effected, which may lead to reduced consumption for the raw material or which may lead to reduced consumption for the raw material, that it also need to be incorporated. Sometimes superior quality of raw material is also envisaged by the department. Then this because of the superior quality, the per metric ton consumption will come down or per unit consumption will come down. So that should get reflected in the budget. Then the raw material procurement budget. Here it will give rise to the value part. First was the quantity part. Here is the value part. The rate, users quantity for the production budget, uses value and the value of the last year. These last two columns should be compared. The difference may be due to higher rate or difference may be due to the higher production as compared to actual. Now, for preparation of the raw material procurement budget, usually following parameters should be considered. Here, let me also share one point. Usually, in many industries, material cost is a dominant part of the cost structure of the product. The raw material procurement price itself may decide the product cost structure. Here, in the preparation of the raw material procurement budget, once the quality parameters are defined by the marketing and production, that need to be coordinated with the purchase department. Then another important part, the, there may be a regular practice to develop new vendors for the key raw materials. Now, when the new vendors are developed, then it will result in twin benefits to the company. One, it will have the more option with respect to vendors. So company will be able to have the competitive rates from the vendors. Rather than giving single order to the vendors, it may split its purchase order between two or three vendors. Another advantage is that there will not be any shortage of raw materials, so it will result in sustainable production for the company. The capacity utilization and the utilization of the resources will be optimum. Then general inflation will be considered. Procurement of price of last 2 years, it will be a guiding factor. Naturally, the last two columns may be compared. Users value as per budget as against per actual, and increase may be due to rate or quantity of both. Here again, for raw material, sometimes corporate explores the possibility of backward integration. Means for key raw material to have this means economical benefit, company may think of putting up its own plant. That can also be factored to whether it is viable for to have the backward integration for the key raw materials. That possibility also need to be explored. Another important cost factor may be electricity usage budget. Now, in electricity usage budget, electricity consumption and total kWh required to be estimated for the given production. Now, point to be considered for arriving at the electricity consumption, whether any energy efficiency measures, energy saving measures are going to be implemented during budget period, that technical people or energy cell can very well say. And if it has the impact on per unit consumption of electricity for the finished product, that need to be factored into. Then comes the value part of electricity cost budget. Now the company may have the various sources to obtain the electricity like state-run boards, own power plant, windmills, solars, any other sources. Percentage value of total, it will give what is the weightage for the each source which the company wants to purchase. Company wants to obtain electricity. Now for windmills and solars, last 2 years averages can be picked up. With respect to electricity from the power plant, whether this electricity is cheaper as against the electricity from the state board, that needs to be weighted. If it is cheaper than the state, then some sort of a cost benefit analysis need to be carried out, the how much to procure from the own power plant and a balance maybe procure from the state run boards. Then packing material uses budget. That is totally related to production budget. Here the packing material is arrived at for the different packing materials, and their uses is compared with the last uses also, just to have an idea of that it should not go upsell for the company. Then following, what factors required to be considered to arrive at the packing material budget, both quantity and rate. Here the user's budget is that the normal handling loss needs to be weighted based on the past experience. And second thing, that there may be a possibility that some liquid products are sold both in tank as well as in carbos. Then based on the past experience, that carbo need to be worked out by the marketing department or marketing department and production department both. Then this gives the packing material cost budget for the company. Here the rate uses quantity, and it will result in the value for the packing material budget, which again the item wise can be compared with the actual value of the last. Just an indication whether there is increase, and increase may be due to rate or increase may be due to means quantity. If the increase in production expansion is envisaged. Here again the quality parameters. Okay, okay, okay. Here it should consider the following: quality parameters defined by the marketing and by the production, possibility to explore the new vendors, general inflation, and procurement price of last 2 years. Then comes the fixed expense part for the company. Here it is a cost center wise stores budget. The stores means maintenance department will provide this budget cost center wise for manufacturing, for utilities, and for other cost centers. What is the stores expenses which are likely to be incurred? And against that, what is the actual expenditure which is incurred, so that there is no abnormal variances between the budget and actual. Now, what factors need to be considered to arrive at the budget? So one is age of plant. Basic of the store, basic function of this consumer stores is just to ensure that the plant runs smoothly without any interruption, so that it results in sustainable production and sustainable sales. So here, age of plant and machinery, that is one factor we need to be considered, and second is general inflation. Then cost center wise repairs expenses. Again, the maintenance department or the will provide these cost center wise repairs expenses. Mainly it will consist of various ARCs and AMCs. Cost center, it may have the labor contract, etc., for manufacturing plants, for utilities, and for other cost centers. Again, the budget value, percentage of each cost. Here it is just a summary is given, but the percentage of each cost center in the totality as against actual cost center wise, and percentage of each cost center is a percentage of totality. The following point need to be considered to arrive at the budget. Here, when the value for various ARCs and AMCs for budget periods are scope in the current period as compared to previous period, that needs to be also factored into apart from general inflation. And here it will show the cost center wise number of employees considered for the budget. One can list down all the possible cost centers here and just see whether there is any increase or not. That increase, we will see how this increase may occur for it. Here here the numbers are given. This number will get translated into the value. Following point need to be considered to arrive at the numbers. One is new requirement for any plant or cost center, or there may be return. Now here it will give the value part for the budget period as well as for the actual. Now what factors to be considered to arrive at this value? The one is effect of yearly increments to be considered. Effect of union settlement, if due, should be considered. Effect of management staff settlement, if due, it may also be considered. Effect of promotion and employee cost of the any new project which will become commercially operational during the budget period, that factor also need to be considered by arriving at the value for the operating budget. Then here it will give the depreciation for the company for the plant, budget versus actual. Now what factor need to be considered for it? Apart from the normal operations, normal plant and machinery, if there is any expansion, then from which date it is means the commercial production will start. And for any new plant also, when it will be declared commercially operational, so from that date this depreciation will come into picture for this budget period. Similarly, there will be cost center wise insurance expense budget. In that case also, the similar principle will get followed. Budget and actual, the cost center, from the cost center, the value will be picked up for here. Again, both the factors will be factored into expansions of any plant or any new project which will become operational. Then security department budget. Usually security departments are responsible for the expenses which are depicted in this PPT. So these expenses for the budget period and these expenses for the actual year. And total expense and each expenses can be put as a percentage of total just to get their weight. Now, what factors need to be considered to arrive at the budget? Higher charges of the vehicle. Now, its incidence depends upon the number of vehicles company would like to hire and number of visits to other plants, other cities, maybe for board meeting, other business meeting, etc. Running expenses for the company vehicles, maintenance expenses, and security contracts. In the security contracts, apart from general inflation, If any additional scope need to be considered, then that additional scope need to be factored into, like any expansion of the plant, new plant which is not there at present in the current year or previous year, so that need to be factored into security contract for the budget period. Then company secretary department budget. Usually following expense, company secretary department is usually responsible for these expenses, annual report, board committee meetings, form filing with ROC. So that expenses will, this budget will consider that expenses both for budget period or actual period, that will provide a guidelines as against the budget. Now following point needs to be considered for arriving at this budget. For annual reports, the number of pages, quality of pages, sometimes company may go for executive quality also. Means the dealers quality also. For board meetings, any plane tickets to be booked, vehicles, hotel charges, sitting fees, etc. Now the sales expense budget. The expenses here are illustrative in nature. We are more dealing with the concept. Traveling domestic, traveling abroad, legal costs for debt realization, advertising, commission, etc. Now, following points need to be considered for arriving at a budget for selling and distribution expenses. Now, maybe some percentage above previous year level, percentage of plan income, that is the top line, based on marketing effort likely to be made during the budget period, a certain percentage of projected sales, competition and business opportunities. Now, with respect to advertisement, it is often a discretionary expenses, so management can take the call on advertisement expenses. And selling expenses, often it is correlated with the perceived need and availability of funds. Now, once these budgets are prepared, then a question comes from monitoring of operating budgets. Now, in this monitoring of operating budgets, budgets and actuals are compared. Now, it may give rise to two types of variances, favorable or unfavorable. With to unfavorable, again, management may classify it whether it is actionable or non-actionable. With respect to actionable, to the extent it is possible, management may try to mitigate its adverse impact. And so far, unactionable, unfavorable variances are concerned, we need to live with it. First is sales quantity variance. Here, sales quantity as per budget, actual sales quantity, difference, and what is the total value which has gone either in favor or against it. The total will give that picture. Then sales realization, metric ton, and the difference in sales value in value. So the last column will say whether it is favorable, and for each product it will give whether it is favorable or unfavorable. And totality it will be summation of all the products for the company. The reasons for favorable adverse variances. First is error in budgeting. Human can err. Now, conservative approach in estimating sales quantity. Budgeted sales quantity may be 900 metric tons. Actual sales quantity happens to be 1000 metric tons. So it will give to favorable variances. Sometimes the human approach is conservative. Now the lack of coordination with the production department. Here it is adverse, but it is controllable. Controllable in the sense that because of the lack of coordination, production department could produce lesser quantity as compared to what was the market in. So better coordination can be established with the production department. Here the adverse variances is controllable. New market, new customer, means the marketing department has found new market and new customer for the product. That is why the favorable variance has happened. Better product is launched in the market, or even existing product is launched in the market with better features, so it has resulted in favorable variances. Now sales rate variance. So sales rate as per budget, actual sales rate which has been realized, difference in sales rate, sales quantity, and this is difference in sales value, which is summation of column 3 and column 4. Again, it may be favorable, it may be unfavorable. Reasons for adverse, favorable and adverse variances. First is error in budgeting human capital, but this mistakes can be rectified. Next year, it can be more realistic. Launching of better product, because of that, the better realization has occurred, it is favorable. Arrival of the new competitor, we can't help much, we need to live with it. Increase in demand due to favorable market condition, it is favorable. Increase in demand due to coming of new end user company. Our product has gone to new end user company, so it is been favorable for the company. Increase in demand due to expansion of the end user companies, it is favorable. Launching of better product by the, hello, hello, launching of better product by competitor. Here the role of R&D is very important, so it's controllable. Unlike the arrival of the new competitor, here launching of better product, so our product need to compete with the product of the competitor. So if we need to strengthen our R&D, which in turn will lead to strengthen our product features, so that our product is equally acceptable to the market, in the market, as compared to our competitors. Production quantity budget, it will, the variance will be, it will be budget will be compared as against actual. So what is actually actual as against what was envisaged in the production budget, what is the difference, and the previous year actual can also be put over here. Now reasons for favorable and unfavorable variances. Actual production can be more than budget due to following reasons. Here the favorable variance is there. Incorrect or wrong budgeting. Actual budget is actual budget was less as against the actual production is more, so it has given a favorable thing. Conservative budget by the production department. It was knowing that we can achieve X quantity, still that quantity was not given. Actually, less quantity was given. So in actual, more quantity is being produced and it is given a favorable variance. More availability of raw material, it is appreciable. or due to better market condition, it was possible to achieve more production. Now, reasons for adverse production budget. Actual production can be less than a budget due to reasons. Wrong budgeting, ignore it. More educated call is required to be taken by the respective people who are involved in budgeting exercise. Now, less availability of raw materials than what was expected in the budget. Because of the less quantity, actual production is less than budget. Here, there are two things. Explore the new vendors for the raw materials so that this gap can bridge. And second thing, backward integration for the said raw material. Both these possibilities need to be explored. Usually, exploring new vendors should be a continuous exercise for the management so that it offers many advantages to the company in the entire supply chain management. Now, better product is introduced in the market by the competitor. Again, the role of R&D department, some sort of a research is required to be done so that we company can also introduce the product, either new products in the market or product with the better features in the market so that it can have the edge over the competitors. Then raw material usage budget. Here, the actual uses will be compared against the uses as provided in the budget. Difference will be worked out. And for the given product, what is the total difference in the rate, total difference which has come up, then with the raw material rate, its value will be arrived at. Reasons for the favorable variances. Conservative budget because human factors are involved. Because of the better quality. And process improvement by the R&D. Reason for the adverse variances. Ad hoc approach in providing per metric ton norms or per unit norms. Wrong budgeting. Poor quality of raw materials. Now this calls for the better coordination among sales, production, purchase and QC. R&D could not implement process improvement which was envisaged during the budget period. So R&D is again emphasized. Now raw material rate variances. The raw material rate variances in the budget and actual rate is compared. It may be compared for A and B category, that is better for the management rather than going for the raw materials which may contribute to around 8-10% of the total, because usually key raw materials are 8 to 10 key raw materials are there, so it is better to focus on these key raw materials. Reason for the favorable variances. One is conservative budgeting. Purchase may show higher rate, the actual rate will be less. Buying of poor quality of raw material may not be the healthy sign. And third thing is favorable economic condition. Reason of the unfavorable variances. Buying of superior quality of raw materials. Here, the superior quality need to be weighted against the quantity which is consumed, because there may be a cost benefit analysis and actually there may be a net gain to the company. Another reasons for the advance variance may be that during the budget time, it was envisaged to explore new vendors to have the competitive rate, but it was not possible to explore those new vendors, and that is why higher prices might have been paid, which was not envisaged. Now, electricity uses budget. So, what is the total quantity is for each product is laid down? Now, what is the total quantity as per budget and what is the total quantity as per actual? Reasons for favorable and unfavorable variances. Favorable variances may be due to the energy efficiency measures which was not factored at the time of preparation of the budget. Now here it will give the source-wise kWh as per budget and its value means the total electricity cost as per budget, as per actual, and what is the difference between these two? Source-wise. Here it may be that there may be increase or decrease in electricity which is obtained from own power plant as against state-run boards, depending upon the cost-benefit analysis. But overall picture, management has to see whether it individual sources, it may be plus or it may be minus. But overall, it should result in the net gain to the company if possible. Then it is packing material uses budget. Here it will show the uses as per budget, uses actual and difference. This may be prepared for the key raw materials rather than going for the miscellaneous packing materials. The following can be reasons for favorable variances. For liquid product, it may happen that actual quantity sold in pack condition is less than what was budgeted. Some liquid quantity, depending upon the customer's requirement, they are sold both in tanker as well as in some carboys. So depending upon these estimates, this carbo's value might have been expected in the budget. But actually more quantity has tankers. So because of that, in actual, the less carbos have been utilized or required by the customers. Then it is a wrong budgeting, or maybe error budgeting, or maybe actual budget is less than actual production is less than budget. Maybe because of expansion has not taken place, new budget has been, or maybe because of some economic condition, actual production is less than what is expected. The variances. Again, ad hoc approach is there, incorrect budgeting is there. Here, more educated call requires to be taken by the persons who are involved in budgeting exercise. Again, for liquid products, it is same thing which we have seen in favorable. Again, the same vice versa, it will be for unfavorable variances. Packing material rate variances. Rate as per budget, actual rate and differences. So reason for the favorable variances, it is conservative budgeting showing higher per unit rate, favorable economic conditions, quantity discount for buying bulk buying material in a huge quantity. And reasons for unfavorable is this ad hoc approach in providing per metric ton budget rate and unfavorable economic conditions. Now, stores expense budget. Usually, this is compared as given by the maintenance department budget and actual. Here, the experience is there should not be much material difference between budget value and actual value, unless there is some gross error in estimating the budget value. Because usual tendency which has come across, the store's expenses are usually overstated. So there either it will be neck to neck for the management, or it may show a favorable variances for the management. Same way it is with respect to repairs expenses. The cost center wise repairs expenses. Here again, it will show the budget for the cost centers, manufacturing, utilities, and others. Usually, the manufacturing and utilities, they will form part of 80 to 90% of the expenses. Then actual value, and there's a difference. Here, there should not happen the much difference between budget and actual unless there is some mistakes or negligence, or it has been taken as an ad hoc exercise. Because these repairs expenses, they mainly consist of various ARCs and various AMCs. So if their scopes are properly defined, if their value are arrived at this, if their values are arrived at after considering all the relevant factors, then there should not happen that this value differ much. Here again, if the expansion which was emphasized in the budget or vice versa and the new projects, it may play the role for favorable and unfavorable variances. Otherwise, usually the experience says that it will land up on the favorable side. Now the employee cost variances, here it will be the current values for the current budget for the previous year's actual, and then what is the difference between these two. It will list down all the production cost centers, utility cost centers, and other cost centers like stores, warehouse, HR, etc. Now, reasons for the favorable and unfavorable variances. Actual increment may be more or less than what was envisaged during the budget period. Actual union settlement may be more or less than what was envisaged during budget period. Expansion of some plan was envisaged in budget, however, it may be resulting into favorable variances. Now here it may happen that union or management settlement is due, but HR is not in a position to ascertain that how much it will be in terms of value. In that case, it may happen that though the settlement is due, but budget is provided with the remarks by the HR department, that effect of settlement is not considered. Okay, it is well and good, but then it should be properly noted and documented that the effect of settlement is not provided in the budget, so that when the actual and budgets are compared, then it may happen the actual figure consists of the settlement effect, budget period is without the settlement effect. Whatever this settlement effect is there should be proper remark for the management, proper remark for the users. That because of this, the union settlement effect is there, and because of that, the actual is more than budget. And cost center wise depreciation budget. Here again, this manufacturing cost centers, utility cost centers, and other cost centers will appear, and budget for each cost center will appear for the budget period and actual. There will not be much difference between budget and actual. Now, reasons for favorable and unfavorable variances. Expansion of the plant. Depreciation is based on expected date from which it is to become operational. It has become operational either early or late as compared to what was expected at the time of budget. So accordingly, it will give rise to either favorable variances or unfavorable variances. Then, commissioning of new plant. Depreciation is considered based on expected date from which it is become operational. Again, it has become operational either from an early date or from a later date as compared to what was envisaged in the budget. Accordingly, it will give rise to either favorable variance or unfavorable variance. And difference in project cost. Project cost is X and actual cost is Y. So depending upon this project cost, this depreciation will differ. So have the suitable note for it when the analysis is provided to the management. So because of this, the actual depreciation is either more or either less, and which plant has contributed to this either more or less as compared to budget. Similarly, it is a cost center wise insurance expense budget variances. The cost center wise expenses are given, which are compiled over here as against the actual value is put, and the percentage is value of individual cost center as against total value. Now, reasons for favorable and unfavorable variances. Again, the same what we have seen in depreciation, the same case will appear over here with respect to insurance also. Now, this is the security department expenses, budget versus actual. Higher is running expenses of vehicle, maintenance expenses, security contact expenses, and total. Now, reasons for favorable and unfavorable variances. There will be decrease and increase between the individual heads, but in overall, the experience says, and it should happen also, that expenses will be more or less unless there is a gross error in estimating the individual expenses, and how the scope was defined in budget and in actual whether that scope has remained the same, or there was increase in scope or decrease in scope. Depending upon the scope also, this security budget may result into favorable variance or it may result into unfavorable variances. When company secretary department cost variances, all these expenses, the company secretary department is usually responsible. This budget versus actual information is put over here. And what is the difference in value, either favorable or unfavorable, that will form part of this variance report. The reasons for favorable and unfavorable variances. For annual report, quality of the pages, superior page quality to enhance the brand image of the may cost more, general impression. For board and committee meetings, number of board meetings envisaged in budget and number of board meetings which might have taken place actually, train tickets, vehicle hire charges, hotel charges, sitting fees. More number of committee meetings or board meetings may result in more cost, but it is a business decision. Sales expense alliances, traveling domestic, traveling abroad, legal cost of recovery of debt, advertising, which is again discretionary cost for the management. Management needs to take call on advertising, commission. Again, at the time prepares from the budget also it was mentioned, the list is electricity only. We are dealing more with the concept. Reason for difference between actual. Wrong budgeting. Budget is taken as an ad hoc exercise without taking it seriously. The more serious approach is required over here. More better educated call is required to be here. Previous year figures are extrapolated without giving any consideration to current level, current year market condition. This should not happen because extrapolation may not be meaning. Extrapolation again requires to be tuned to the current budget period condition. Marketing may compared to income more expenditure toward advertisement to penetrate new customers or products or new markets. It is totally a business call. Actual commission may be more or less than budget due to actual quantity, or it may be more or less as compared to budget. Then we will come to what are the advantages of budget. First of all, it involves the entire supply chain management, right from sales, marketing, production, purchase, stores, warehouse, finance, or HR, or company secretary, entire. So it creates a participative atmosphere. Nobody feels that some department is left alone. It creates an atmosphere of cost control or cost reduction. I remember sharing my experience in some webinar or some seminar also. The question was that whether budget acts as cost control or cost reduction. Now, how the management takes it, the budget, it results in cost control also or cost reduction also. If the expenses are met, it is cost control. But if the expenses are assigned, it is cost reduction. So budget can be both cost control or both cost reduction. How the management takes its approach towards the budget. It leads to optimum utilization of available resources. Usually, budget provides for 100% utilization for all its products for all plants. And this 100% utilization means it results in optimum utilization of all the available resources. So that is also one of the great advantages budget offers. Then it provides the top line, say X crores. So it provides the management to proceed further. It provides the basic guidelines what we are expected to achieve. Then it provides the likely bottom line for the budget period, Y crores. That will need the PBT or profit need to be these Y crores. So it provides the basic guidelines to all the functional heads that all these expenditures which are required to be incurred by all the functional heads, they are required to be restricted between X and amount. So these are the basic advantages what budget offers to any entity apart from corporate world. What are the disadvantages of budget? Functional heads often tend to be very conservative. Often the KPIs of the top level is linked with the budget. So they're afraid to commit for the budget. Second thing is it is very time consuming, no doubt about it. Third thing, it requires dedicated staff with respect to all the functional heads to look after this entire budget exercise. So every coin has two sides. So here also it is a coin, it has two sides. Practical aspects of operating budgets. Functional heads that tend to be conservative. The human factor plays its own role. So based on this conservative, functional heads provides this data. Based on the data which are provided at the first instance, budget is being prepared. Now that may give an what we say a little bit of unrealistic picture to the manager. When the top line and bottom lines are decided, this may not meet with this top line and bottom line and all other expenses. These top lines and bottom lines, they are compared with existing top line and bottom line. They are compared with expected top line and bottom line. Then again, entire functional budget, all these functional budgets are deliberated upon to make them realistic, to make them fall in line with the management expectations. Now, from this conservative approach, it is to be brought to the realistic picture for all the functional heads which really matter with respect to these functional budgets. Maybe marketing, maybe production, maybe raw material part, maybe utilities part, maybe electricity part. All these functional heads are required to switch over from conservative approach to realistic approach to make this to make the picture acceptable to the management. Then maybe number it calls for number of meetings, it calls for better coordination also to get it acceptable to the management and get it by the board. Human aspects in budget. Usually HODs remain conservative with respect to providing budget input data. What should be the actual when I'm providing this budget? What should be the actual? So better to provide those data when the actual remains but budget remains favorable to the management. Product sales realization may be understated, procurement rate may be on a higher side, expenses or repairs expenses may be overstated, etc., etc. These are just the how they remain conservatives. And from the conservatives, again, they need to be brought to the realistic picture. Conclusions. Operating budget has its own advantages if implemented properly and monitored properly. It has its own disadvantages, which we have seen. It is also influenced by the human aspects that also we have seen. In view of what it is stated above, it is for the organization to ensure that benefits of budget accrues to it, and the benefits far outweighs the disadvantage negative impact of the human behavior aspects associated with it. This is how I have shared my experience with respect to budgets and what factors need to be considered and how in practical life it takes the shapes and it becomes acceptable to the management. I hope I have given justice to the this justice in the that I could share my knowledge and experience in a proper way. Anything we can deliberate it upon?
Thank you, sir. If a member have any questions, they can ask directly to Rajesh sir.
Hello?
Am I audible, sir?
Yes, sir, you are audible.
Yes. Sir, if you have finished your PPT, then we'll
Ah,
request member to ask question directly to you.
definitely, definitely. Here, I would like to add one point that sometimes the company may adopt a rolling budget also. Rolling budget in the way when the budget is prepared in the month of December or January or February, there one set of situation exists at that time, and depending upon that situation, the budget takes place. But sometimes in the key parameters, some key parameters changes take place, and to make that changes incorporate in the budget, sometimes company may have the tendency to prepare its rolling budget for the given period, and the variances may be compared against the rolling budget. Just I'm adding one more point based upon the experience.
Yes, sir. Rightly said. Rolling budget is also important, and we will request, sir, if you just emphasize on zero-based budgeting, so it will help to new members also. राजेश सर, अगर आप जीरो बेस्ड बजटिंग के बारे में थोड़ा inputs दोगे तो it will help member. Zero based budgeting.
Okay. What happens in zero-based budgeting? It is assumed that you don't look at the past figures. There is no extrapolation. As if this is a given level of activities, what will be the different functional expenses will take place. Meaning that in the zero-based, when we talk about the zero-based budgeting, we talk about the absolute sense that my top line I expect to be this value. Based on that, the marketing department will its budget that this is the top line which is expected. Depending upon that, the entire supply chain main functions. But in that case, the past reference is used, but past reference is used to the minimum extent. Means the figures are not extrapolated. Extrapolation is avoided to the extent it is possible. Am I it clear?
Yes, sir. Yes, sir. Thank you so much, sir. Members can ask a question
I
to
would I
directly.
would I would like to add one more geomet budgeting that
Yes, sir. Please.
justification has to justification for any resources that has to be absolute justification without any reference to past period. Once you refer to the past period, it becomes an extrapolation. So that justification has to be the absolute justification that this resource required to be consumed or these resources are required to be incurred, these resources are required for sustainable production and sustainable sales. This is also one of the premises of zero-based budgeting. Therefore, each resource is consumed, there has to be absolute justification without any reference to past experience. Past experience can be a guiding factor there, but in zero-based budgeting, it is as good. There is nothing, past data, past trend is not available. This is the expectation of the management, and different functional budgets are prepared based on that expectations, or that is a requirement of the management.
Nikhil sir, I think there are no questions from the participants. So shall we move ahead?
Yes, 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 Arif, sir. Please.
Okay. So before we move to vote of thanks, I have two quick announcement for our members. We are having one physical session on 25th of Feb 2023 on show cause notice, its reply and adjudication. This will be a physical session So I would request all the members to enroll themselves for the same. Second announcement which we are having is for our sports activity, which will be conducted on 26th of February. It's a cricketing event for all the members, students. So I would request all the members to join there as well and motivate our students and members. Now I request Nikhil Pawar sir to kindly present vote of thanks.
Thank you, Arif sir. First of all, thank you so much, Rajesh sir, for this beautiful session. It was request from Bhushan sir and me that we should have a budget session because it is a budget month. Last 2 months, I was also the part of budget preparation in my organization, and I felt personally that it is very important and right time to conduct this session for our members and students. So first of all, thanks Bhushan sir for this consult and my management committee team for approving this session. So thank you so much, team, and special thanks to Sriram sir for visiting and attending the session. He personally called me and told me that Nikhil, I will definitely join the session based on the budget that we are going to arrange. So thank you so much, Sriram sir. Also, thank you so much, my Nashik members and other members from across other chapters, and thank you so much for students, and a special thanks to my staff members. So with this, I conclude that today's webinar is flow. Thank you so much, sir.
Thank you, Nikhil sir.
Okay, Nikhil, thanks for providing this opportunity.
Our pleasure, sir. Thank you.
Thank you.